one in the chat box. Let me know that you can. I'd greatly appreciate it. Hey, Helen, good morning. Afternoon, Brenda. Andres, good to see you, my friend. I'm just trying to get everything set up here, folks. Sorry, I've been fighting with an insurance company today. All kinds of fun. Yep, got it. Andrew, I appreciate that. Hey, Lan, how you doing? Kevin, afternoon, sir. All right, let me go ahead and where did my PowerPoint go? All right, there we go. Let's go ahead and get camera going here. Nope. Ah, okay. Hopefully it lets me turn it on. Ah, there we go. Beautiful. All right. So as we do get started, keep in mind that everything we look at is for education. Nothing's meant to be advice or recommendations. If you find something that you like, anything, make sure it fits your own personal risk profile and risk tolerance. So our agenda for today, we've got our follow us page first. We're going to go through today's trades. So whatever trades you did today or over the last couple of days, you could drop those in. You can start dropping them in now if you'd like. Economic reports. We'll look at that. Market review. I've got some interesting comments on what's happening with the market, the upcoming future trainings, our weekly training topic, which is usually the biggest hit of all, and then your stocks in review. So stocks you want me to look at before we wrap everything up. So here's our follow us page. You can go to any one of these websites, get right onto our, if you go to Twitter, there's the handle for it. If you go to YouTube, there's our handle. Trade with Rob is on YouTube as well, Facebook, and so forth. The trading post, you're going to need to actually click on that link to do so. Andrew will drop that in for you guys in just a moment. Here we go. And you can go ahead and do that. I do not register everybody for this automatically. You have to subscribe and say, yes, I want to be on that list. We've got a couple thousand people on there, so we know that it's working. All right, let's see. All right, today's trade. So what trades did y'all do today? Drop them in. Let me see if I got that, Brenda. I didn't get a chance, it's no, nope, I didn't see it, Brenda. Um, all right, so Brenda said 50K this morning on in about 3 minutes on SPY. Remember, Brenda trades very large number of contracts, guys. Um, That's okay, Jim. Glad you made it. Amelia said 31% on Tesla. In 9 minutes, Amelia, I had them on my list and just didn't do it. The setup wasn't as pretty as I would have liked it to have been, but it was there. There were some decent opportunities for sure. I just didn't get to take advantage of that one today. Yeah, I got in coin today, Pat. It wasn't, I got out too quick. Really bad choice on my exit on Coinbase. It worked. It worked. Again, everything's non-funded, right? It worked. It made money, but it wasn't my home run for the day. I'll share with you guys in just a moment what is or was. So, very first thing was Amazon. Amazing Amazon, right? So let's go look at Amazon. All right. So, you guys, you got to look at, and I say this all the time, and I've had people tell me, Rob, you talk about it too much. You just keep saying the same thing again and again. Yeah, you know what? I really do. And the reason for it is it's what works, right? You have to do an analysis of where you were and where you are from where we closed, what the candle looked like on Friday, your previous trading day, versus where we opened today and what the pattern did. So if we take today off of the screen, right? If I just get today's candle off the screen, right? And yes, you know what it looked like, but just look at the candle on Friday to make it easier to do. I look at the candle and say, okay, we're in a bearish bias, we're in a rank of two, we're sitting right at a fib line. Man, I'm liking this a lot. What do I need to have happen? That is the magic phrase. What has to happen next? Once I know what the next step is, I know whether or not I'm going to play the game. Until I know that, I don't know whether I'm going to play or not. And too many people have no idea. And the next day, the market opens, it does whatever it does. And you are in this panic mode of I need to place a trade. Should I do it? Yes, no, maybe. And now you're trying to make a decision in the heat of the moment. I'd rather make a decision on what I'm looking for. When it happens, then and only then do I have the trade. I had 5 or 6 stocks on my list today. Got 3 of them today. I had a decent amount of time today. So Patty said didn't see a close didn't see a close enough retest on Amazon. We'll look at it, Patty. I'll show you what I did. So we gapped up, and I love the way it gapped up. Again, keep in mind, look where the moving average was. We were all the way up here on Friday. So you cannot count the moving average being down here now. That's from today's candle. It's not sitting at, was not sitting at the fib line when I did this trade. Not at all. It was right where it was, give or take a little bit, maybe a little higher on, first thing in the morning today. Was not where it's sitting right now. So what do I want to have? Fail, retest, drop, right? So let's first go look at a 5-minute candle on Amazon. And we're looking at today, one big candle. I like to see the 5-minute setup better, but that's telling me when I see that big move on that first candle immediately right out of the gate, if you're looking at this now, you've got to be willing to use 1-minute candles and get in this trade quick in order to take the trade. So let's go and look at a 1-minute candle and see what happened. So what did we do? We had a close fib line of 227.40. Right? I don't know if it'll let me write on the screen and go back and see what's going on numbers wise. Let me pause this, right? Yeah, I don't know. Let's see. So the fib line, now it won't let me do it. Okay. So that's 227.40. We closed on this 1-minute candle at 226.80. So we're talking about 60 cents away from that fib line, right? And then we made a move up to the high on the second candle of the day at 9:32 to a high of 227.10, which was 30 cents from that fib line. Do you need to be able to make a quick decision on this? Yes. Here's the really good news. If you're sitting there saying, Rob, I can't do this junk at 9:32 in the morning. I can't pull the trigger. I just can't do it. It's impossible. Can't do it. Guys, this was me, 15 years ago. I could not, this was me 10 years ago, 8 years ago. Not that I couldn't do it 8 years ago. I didn't like doing it. I was not a fan of it. But, bottom line is this. If you own a business, okay, as markets change, you've got to shift. You need to pivot, right, to what the market is doing. And I'm not talking stock market. I'm talking about in your business. If you work at a job and new certifications, technologies come out that are required for you to continue to do your job, and you choose not to do that, you probably no longer have a job, at least not one that most bosses are going to want to pay you what they did before, right? So you've got to keep up with what's going on. So as I got more mature in my trading and markets shifted, I had no choice. A great example that I use all the time when I'm talking with family members, because they know, is I used to be very much I would sleep on my stomach all night long. I mean, I would lay down in bed for 8 hours, 9 hours. I wouldn't budge on my stomach. It got to a point that with a bad lower back, and I'm sure that contributed to it, with a bad lower back, I can't do that any longer. So now I got to sleep on my side, sleep on my back. Well, flip over to my side the first night, and it's a horrible night's sleep, right? Why? Because you're not used to it. It's uncomfortable, right? But uncomfortable is good. If you ever came to one of my workshops, I would start many of them off, the live on location workshops, by having everybody shift their watch to their other wrist. So hold your hand. Who's got a watch on? Hold your hand up. Good. Take it off and put it on the other wrist and wear it like that for the rest of the event. Right? And 10 minutes later, is it uncomfortable? Oh man, I hate it. Yeah. By the end of the day, is it uncomfortable? I don't even realize it's there. Right? As you get accustomed to it. That's what trading off a 1-minute candle is for that. So we stretched up, we dropped down, we gap up, we dropped down, pulled back up, failed on that candle. We would have waited till we got at least $1 or so down off of there. This was about a 12.5% rate of return in a fairly short period of time. We kind of rolled out over here, but 12.5% is not horrible on an Amazon. But I had this plan in place from Friday. From Friday, if I look back at a daily chart, come on. Oh boy. Okay. Daily chart. There we go. Red arrow again. Okay. If I look back at the daily chart, what would make me want to take a bullish trade on this? Nothing. Zero. Nada frickin' dinksky. Nothing. Oh, what if it gets above the moving averages and it's in the middle at a rank of three? Why do I want it? So the only trade is a day trade, bearish. That's it. Now, are there other things you could have done? Could you have done a credit spread or a debit spread? Yes, but guys, it's whatever your pattern is, whatever your system is, your trade setup is, just you need to lay that out for you, and that's going to be the setup that you're looking to take, is right there. Okay? Give me a one for yes, a two for no, if that was helpful as we kind of walk through that a little bit there. Lots of love in there. Thank you for that. Excellent. Good. All right. Let me see. Did I miss anything? Okay, I don't think so. All right, then we had Coinbase. Who had that in there today? Was that I thought someone had coin in there. Sorry, guys, a lot of comments for me to get through. I don't know. I'm just not seeing it. Hey, Roman, how you doing? Um, well, Patty, you did. Yeah, I thought it was there. Why? I don't know why I'm not seeing it now, though. It's like the message is gone because I'm looking for your name on across the board here, and I just don't. Anyway, it was Patty that had said it. Okay, so Coinbase today, right? Again, so what happened? We closed where on Friday? You know, rank of two, moving average was in the middle there, so nothing there with that moving average, right? So what am I looking for? Move down, retest, fail. If it does that pattern, there's an opportunity. First place we go is a 5 minute chart. And keep in mind, always, always, always remember, if I'm doing this on TradeStation, which I am, my charts are broken up into four windows that are left automatically: 1, 5, 15, and daily. Never, ever, ever change them. They stay like that, and they're all linked together to my options grid, my option chain. So if I change the symbol on one chart, or if I change it in the option chain, it changes across the board and gives me, all the same symbols, in each of those, so it's easy for me to look at, right? So what happens, here today? So we look at the 5 minute chart, and we open flat-ish, stretched up a little bit, and then we fail. Support right here is at 264.70 is our support. Okay, we closed at 263.45, so 75 cents away is where we closed. You can see we stretched back up, but let's go look at this on a 1 minute chart. We failed. We closed right there. We broke above. We failed again. So now if we look at the 264.70, and we're looking at a close here of 263.25. 263.25, we already had the close right there, right? 263.25. We stretched up here. Remember, 264.70 is resistance. We had a high of 263.41 to 264.70. I'm sorry, 264.33. Let's call it 30 and 70, 40 cent difference from where we stretched up and failed. We're not in it until we pulled back at least $1, right? Boom. This had a great run. And I don't know what possessed me in the middle of this trade to pull the trigger with barely over $1 of profit. This option went to like $16, $17 from 10-ish, from just under 10. Went to $16 or $17. I wanted about $1.15 out of the trade. Did it work? Yes, it worked. Right? But they were playing some games. They were playing some games where it looked like, at least I saw on TradeStation, with options pricing, and it seemed like there were some bigger spreads forming in there, and it just made me uncomfortable. I pulled the trigger, and then I looked back saying you didn't follow your plan, right? I called an audible for maybe the wrong reasons. It worked out, so I'm okay. But really bad choice on my end for pulling the trigger where I did. Jim said Coinbase daily chart setting up an H pattern or it did not come back up enough. So if we go back to the daily on that one, Jim, let's look at it. Yeah, so it needs to get, it's got to be 50 or 618 for the H. So anything that comes off of a 382H is what I've been calling it. If it's a 382H, it really doesn't count. Does it work? Sometimes. Do we get a two-line move? Normally not. If we do get a move, it's one, which is what it did here. We don't get a lot of repeatability of this. Remember, it's all about, to me, reliability, repeatability, predictability, right? Lots of ability there. There's no repeatability on this off of the 382. One of my students out of New York would come to my event every quarter, 4 or 5 times a year. I would teach in New York. He'd be there. I could be teaching in Brooklyn. He lived out on the island. I'm sorry, I could teach on the island. He lived in Brooklyn. And he would come out to the Long Island one. It'd be going on at the same time, or a week later, he'd come to mine instead of the other one because he wanted to see me. I was in Jersey. He'd come to Jersey. And he comes with his cousin every quarter. And they come and he goes, "Have you looked at the 382H?" I said, "I've not in a while." Why? He goes, "Man, it's crushing it." Really? And he showed me a bunch of example trades that he had. And I said, "I'm going to start watching it." And I really didn't do much with it. The next quarter, I come back to the event. He was working, couldn't come, but his cousin was there. I said, "How's it working out?" He said, "You know what? Right after the event, it just stopped working." I said, "Yeah, it just, you're going to get some times that it works. But to me, I need it off of that 50 at least, Jim. So it's got to close above the 382. Ideally, it closes in a higher percentile of the distance of these two fib lines, the 50 and the 382. It closes in that top third at least, or pushes up into that top third at least, I should say, and then fails from there. So yeah, anything off the 382 would be a no for me, anyway, as an H. Um, Dennis said, "Our widening spreads a signal for a major move approaching." So, Dennis, a lot of times a widening spread is nothing more than a market maker going, "I don't like what's happening here." It seems like someone might know something or get lucky. I don't like all the interest going in at this position right at this point. So let's open up our spread. So this way, God forbid, this person gets in a trade, and the market explodes in that direction. They've got to get through all of that spread before the market maker gets in trouble. So it's not necessarily saying, yes, there is a problem. What it's telling us is that there's a concern potentially on the market maker side. Now, the other side of it is, or the other part of it is, I have seen it from personal experience. Rambus just dead. There's no way around it. I've seen it 100 times on Rambus for sure. Because Rambus was a stock that I probably traded for 15 years over and over again. And with covered calls and things like that. And I would put a trade in for to buy a position or a covered call or whatever it was, and it would have a 40-cent spread. And you put it in and try to get a dime. So let's say it was $2 by 240. Well, I don't want to pay 240. I put in 230. So here, actually, let's do it this way. So I'm going to throw too many numbers at you. So it's 2 by 240. Sorry about that. 2 by 240, right? So my order goes in at 230. This is me. Okay? My order goes in at 230. And what does the market maker do? 230 by 240. Oh, well, that's interesting. So let me go put it in. They're trading in nickels. So let me put it in at 235. Right? Okay. So we're going to go to 240 by 250. All right. You know what? I'll pay the 240. That's fine. I'll pay the 240 now. 260 by 290. Oh my God. All right. You know what? I want in. I'll pay the 290. I'm in. I'll take it. I'm in. Next bid, 2 by 240. Why? The market maker played a game to get me back to this. I'm sorry, back to this right there. That they had you on the hook. If you didn't bite, they didn't care. They had you on the hook, and I've seen it happen over and over and over again. Then he said, "I've had this happen." Yeah, it is a real thing. It is a real thing. The market maker plays games with you. Now, it may not be this smooth, it may not be this easy. Then Rambus wound up becoming a company that you knew it was 15 to 20 minutes before they would accept anything in the spread. And I was writing covered calls regularly on Rambus, monthlies at first, every month for years on Rambus. And it just got to a point that I knew, okay, I'm going to put my order in and I'll come back in 15 minutes and see what's happened. Because you know they're going to move, because I don't put it in at the ask price, I put it in between. And they move it, and all of a sudden you'll hear from another room, order filled, trade station. Oh, what happened? You come back and you look, and it was at 2 by 240. I put it in at 230. They didn't fill me. And it still shows 2 by 240, but I was filled at 230. Why? Boom, boom. They moved it up, hit my trade, and then they walked away. Man, might as well get the 30 cents. We're not getting 40, might as well get 30. Right? So, okay, thought there was another question there. So I like the pattern. I like the break. I like the retest. I like the fail. I just got a little wiggy with the some of the bid ask stuff today, right? Costco. Love Costco. You just got to watch sometimes on costs, okay? Look where we closed. It's a bearish bias rank of 1. I love it. I love it. Beautiful. What's the plan? First thing that I see, first thing that I notice is 3 days in a row, we've gone and played ping pong between the two Fibonacci levels. We've been up and down between the two levels, whether it was down one day, up the next, down and up the one after that. I don't care. We've been between those two levels. So I know without hesitation, this stock can do this easily in a day, move from one fib line to the next. Okay. So, and we're talking about 870 to 886. 871, 886, $15. $15 in there. Can this thing make a decent move? Oh, heck yeah, it can. So what happened? It gapped down. So when it gaps down, I am sitting back here in position 1 of my chair, and I am watching it. And I am waiting to see, are we going to retest the fib line? Now, how long will that take? Could take 30 seconds. It could take a couple hours. If it takes a couple hours, I'm not interested. If it's not happening early enough in the morning, I'm done. I'm done. I'm walking away. That's not a trade for me. So now we go look at a 5-minute chart. Right? It gapped down and it runs up and it closes. Here's the fib line, 886.35. It closes at 886.13. 35, 13. 20 cents away. We gap up, we failed, right? Was that close enough and that was the fail? Okay, right? Well, Rob, maybe, but I don't know. Maybe I wasn't ready on that candle. All right, well, here. We closed all the way down here on the second candle of the day, 882.88, 886. You're $4, $3.50 away. So remember, this resistance is 886.35. We stretched all the way back up here to a high of 885.20. 886.35, just over $1, $1.15. So you had the close here, the gap, and then the fail, right? And that fail was hard and fast. And then we even came back one more time and pulled back, right? This was a home run. And when I say home run, the option was just under $8. Just under $8. And you're looking at an 84% on Costco for the day, which is not a bad setup for an intraday trade, right? You go over to 1 minutes, right? Look at there's the setup, there's the drop. You could have even had this pullback and fail, right? Everything was there, but I already had my plan in place, knew what I was going to do, execute based on what it does. Based on what it does, I pulled the trigger, right? Are there days where I sit down and have nothing gets pulled? Yes. Where not one trade goes off? Yes. Regularly. I don't need to trade every day. I don't. Here, if you look, I don't have it in front of me, but if you look at Trade with Rob, I send 3 trades out. Video of 3 trades each time I do it, right? 1, maybe 2 will go off. There are many days where none fill. Nothing triggers. What does that mean? No trades today on that setup. Doesn't mean there's nothing else to trade. That one setup, there was nothing to do, right? So the whole idea here is start off with your daily charts. Have a plan. So if we are right now sitting on Costco, if Costco closes right here, right now, this afternoon, 4 p.m. Eastern time, what's my plan? Small move down, re or a move up and retest the fib line and fail. So it can either go down a little bit and then come up or go right up and fail. I don't care which one, but I need it to, depending on how close it closes, I might need to get away from it a little bit. And there's a reason for that, and it is psychological. If the stock starts moving down, who is in control, the bulls or the bears, if it starts moving down? The bears. Okay, here you go. Good. The bears. So the bears take control. Now, that almost feels like a breakout. Oh, because there was no retest. Bingo. So the bears take it down. Let me get my pen. You know what? Let's do it this way first. Let's get that up a little bit. Don't do that. Okay. So the bears take it down. I'm not talking about take it down to the fib line or anything. It moves down a little bit. That's all I need is a little, right? The bears are in control. What happens? Now we see a move back up. Who is that? Obviously, it's the bulls, right? If I can get a failure to happen below that resistance and the bears take back over, it tells me the bears started off the run. The bulls said, oh, hell no, we're going to get in there now. And there's a market maker, a floor trader, a Goldman Sachs, somebody sitting there saying, let's see if this run is really going to work. We're going to throw some money at it bullish, and we're going to go back to position one in the chair that Rob taught us, and we're going to watch. And if it does, we'll add to it. And if it doesn't, we'll close it out and jump on the bear side. So they move the position back up. This move up shakes out all the looky-loos. All of those of, oh my God, oh my God, oh my God, it's bouncing, it's going to run, I'm going to lose all my money. It gets all of that garbage out. And then now there's nothing left but the pros, right? Or the ones that are just lucky. And it rolls back over on this. So this was move number one. The move up was number two, and the move down was number three. Okay? Number one was the start of it. Number two gave me my pullback, my retest, and my fail. And number three is the entry. If that happens, I already have my rules. My stop is going to be set somewhere about here. My target is going to be set somewhere about there. And so I'm going to use either one of three exits. I'm going to use end of day. Let me rephrase it. I'm going to use a target just above resistance, right? Which we've got our rules that I use in POP. So that's target number one. Target number two is a micro day trading exit, where I'm going to get out intraday based on an overall pattern. And I taught all of that in a full training where I went through everything there was to do about the micro day trading exits, the hows, the whys, and all of that. Andrew, if you want to just drop a link in for that, guys, it's fairly inexpensive. If you're interested, great. If not, just ignore the link. Don't worry about it. But I know so many people have gotten so much out of that training because it gives you an opportunity to not wait to the end of the day, to not wait to hit resistance, to go, oh, pattern based. Let me get out. Let me get out. So that's exit number two. Exit number three says it's 3:45 in the afternoon. We ain't hit a target yet. What do we do? Get out. Third exit is time-based. Get out. Just close the position, market order, call it a day, we're done. Or can I put it to 3:58 in the afternoon? You could, and hope your computer doesn't have a problem. Yes. 15 minutes prior, don't worry about the difference. Right? And I don't care what your number is, what your time frame is, I mean. You need to have a hard time that says, I'm out. If I'm not out, I'm out. Andrew, put in a link to micro day trading. That's what I was asking for. To micro day trading. All right. So that's the pattern. That's the setup. That's what I'm looking for. Period. That's it. That's it. Now we close about where we are now, a little bit lower. That's a rank of 3. I'm not interested. That'll be, secondary tomorrow, maybe if it retests. But man, it better be a really strong retest and fail for me to want to take that trade tomorrow if it closes, in the middle somewhere. So you got to have this set of rules, right? There's no free lunch. There's no, this is easy. There's none of that. Nothing is easy. Those that talk about that absolutely lie. Listen, I'm in two separate masterminds that are stock market related that are not wealth builders that are mine, that I attend, that I pay for. In those masterminds, some of them are professional traders that are in those masterminds. Some of them have their own education companies. And we talk about things like this all the time of, okay, when the stock does this, when it does that, what's your pattern? What's your reaction? How do you handle this? What do you do for that? Right. And there's a lot of that discussion goes back and forth of this is the way we react. When this happens, that's all if then. If this happens, then do that. Right. And that's all you have to do is put your plan together. If this happens, then do that. What's that? That's what you have to come up with. How are you taking that trade? That's where a micro day trading exit comes in. That's where a pop exit comes in. That's where whatever exit you developed comes in. Okay, is from there. All right, let's go back in here. Let's go look at economic reports. Here we go. Let's see. Forex factory. Oh, got a lot open right there. Let me get rid of the yellow. Let's get rid of everything but US. All right. So today we've got Empire State Manufacturing Index that came out pre-market. So this is a rank of 3. It's orange. So unless you're trading futures, it really doesn't matter. Tomorrow, ADP is tentative. We don't know a time on it yet. Lots of 8:30 reports tomorrow. They're all big. They're all going to relate back to what happens with interest rates, right? There are 2 because the market is closed at that point. But right here, PMI manufacturing and services, that's a 1, right? Big reports. FOMC member Waller speaks. I saw they had one of the FOMC members on CNBC before. I caught very little of it through a conversation I was having with somebody else of Trump's new pick for Fed chair, blah blah blah, right? And I don't know who it is. I haven't looked at it at all. But I don't know if it was another Fed member. If it was this guy that was on, I didn't see his name, but they did say I did see he was from the Fed. And talking about having to stay and what the next steps are and so forth. There's concerns from both sides. I don't know if Tripp is in here with us right now. He is. Okay. So Tripp and I will go back and forth in Mastermind and Inner Circle and the likes of I want to see the drop of interest rates. He doesn't. And for different reasons, guys. Right. And both of us being right. Is there some instability with inflation if rates get cut too much, too fast, too hard? Yeah. Can unemployment start ticking up? Yeah. I mean, there are concerns. What happens to the dollar? What happens to the bond? What happens to all of that? Do we get back to a situation where the banks go, hey, we've lowered rates so much from the Fed, but we don't trust you anymore, Mr. and Mrs. Public. So we're not lending money at this point unless you want to borrow $1 million? Do you have $1 million in the bank as collateral? If not, we're not going to lend it to you. Why do I need your loan if I got the $1 million? Right? Well, we had that happen over and over and over again with banks. So there's fear of some of that taking place as well, right? So although he's listed down as orange, and it is a 815, I'm still going to give it a 2 because it is Fed. And there's some dissension is not the right word. There's some talk out, some speak against type things happening right now with some of the Fed members because they know that Powell's on his way out, right? So they don't care. They're not worried about rocking the apple cart or rock the boat or whatever it is. So Fed member stuff to me right now, it's got some value to it. 8:30, everything on Thursday is 8:30. We're going to give it all a 2 because it is red. There are some red in there. Philly Fed is in there. And then this is also going to be a 2. Market's open, but it's orange. So I don't really care, right? Could it move the market? Yeah, I guess it could, but I just don't see it being that big of a deal. Tripp said, word on the street is that we will see 1 cut next year due to inflation fears. Last vote was 9-3. One member wanted 50-point cut. The other 2 wanted no cut. Yep, that's exactly it. And word on the street, if Powell stayed in power, I agree. Will Trump's choice get confirmed? I don't know. Will there be some problems with confirmation? I do believe definitely, yeah, they're going to try to fight the confirmation. Bad for the country, yes. But that individual, they ain't getting in there. Listen, the Fed is independent, but there ain't no way they're getting in there unless Trump's already got a belief that this person is going to drop rates the way he wants them dropped, right? Has the same belief system as him, meaning he thinks they should drop much further down. So would one be bad? I don't know. I think January is a pass. I'd like to see January as a pass. I do not think January is a place to drop. I don't think there's a February, and I think we have a March. Is that correct, Trip? We have nothing in February, and then we have a March. I'd love to see us not do anything the first one. Yeah, that's correct. Okay, good. So January, we have a meeting. February, we do not. March will be the next one. So I'd love to see the drop, the pass. We don't have to cut in January. If we pass that, let February go by and March steps in, at that point, I think we'll have a better ability to make a decision. A cut in January could become a little dangerous if it pushes us more to the inflationary side. So we really have to see. Yeah, Powell's term is up May 15th, but he's already nearing dead duck, status, Jim, right? I mean, he's got, it's not going to get a lot of his word doesn't mean as much any longer because he doesn't have the power that he used to because he's going away. And I don't think overall, I don't think he did a bad job. I think he was just too late to the game to lower rates. I think he should have jumped in a lot sooner when the rest of the world did on that. And although it's not his ultimate decision, there is a vote, he held a lot of sway. All right, so there is that. All right, market review. So let's go back and look at the S&P 500. All right. And the rain came down, down, down. So this orange bar right here is last Monday, right? I left it up there. I'll change this for pop later, but this was last Monday. And I talked about, I did not expect to see a run to the upside. I would hope for us to go sideways a little bit. And we did. We popped. We got a new. So let's back up a second. This right here on the 27th of October, that is the all-time closing high. No, I'm sorry, that's not. My bad. What am I talking about? It's not. The all-time closing was here. Right? Close on this one was 890.89, and here is 890.59. So, yeah, this one was a little bit higher. This was a little higher. So that was the all-time closing high. Okay? We stretched above our recent swing high. We closed near the very top of the day on the 11th of last week, which was Thursday, which gave us a higher closing high, not all-time high. We pulled back, and Friday was a big give back. Wasn't surprised to see it. I think it was a little bit of a let's just get up to a new high, recent swing high, and see what happens. We have that in there now, and then we backed off. And today, well, not even today, Friday, we chipped away at the ice. We broke away. We chipped away at that 21 moving average, and said to the bears, "It's open. If you want to take advantage and go down next trading day, it's available." And we have, we did gap up today and a fail. Overall, we're still sitting in a bullish neutral bias right now. We're at a rank of 2, maybe 3, but rank of 2 right now. So there is some strength still in the market, but the candles themselves are showing weakness. If you look down at the very bottom of the page, the CCI has shifted over to bearish. We're down below the zero line right now. So we are now in fall. Right? Winter. Sorry, fall was up here. We're in winter, which is same type of pattern on a histogram on a MACD. We're in winter. We were fall right here. Right? So overall, bearishness, the ADX is not giving us much, but it is SPX, so you're not going to always get much out of that. But right now, we are looking still a little bit weakish. Lower, if we close right here where we are, we have a lower low and a lower close. Still above the 21 moving average. Will it take much to get us back? Guys, if we bounce out of this and we just do this, we're bullish all over again. We're back in a true bullish bias, rank of 1, maybe 2. I'm sorry, maybe 3. But we're in a true bullish bias at that point. Do I like it? Yeah. We're not that far away. Can we easily make this? Yes. What about this breakout up here? What's expected? We're going to break. We're going to break hard. We finally do break. I think you'll see a wick pierce through it. You see the wick pierce through. You might get even some height to it and a pull back. You're going to close down below, maybe just above. That's going to determine how we handle it, where it closes, right? And then look for the breakout. And in many cases, forget about pullback. It's with the break, I'm looking for a hard break. Traders are looking for that break above that all-time high, right? And when you look at what's going on overall, we still have very strong markets. Gold is still very strong. Crypto is still very strong. The S&P is still very strong, right? So there's a lot of signals pointing in a direction of I like this a lot. Okay, but does it take much? Watch my phone light up today or tomorrow. If this is what our candle looks like, either the end of today or tomorrow, and we get down below that 21. So, what's my initial thought process then? Where's the next stopping point? The next fib line. Okay, if it makes it to that fib line, what would have to happen for me to want to take a trade? Is there anything that I'd want to do to take a trade? Do I want to just manage something, walk away, bearish, bullish? Whatever my plan is, I need to do it one line at a time. Oh, but Rob, there's this super fib down here too. That's 67.65. Yes, that black line. That black line, right? So are we going to get a bounce off of that level from there? What if it bounces and it closes right here? Great. My next target is my 21 moving average. Then my 8 and my fib line, as a combo, will be my next one. And then we're back in bullish territory all over again. It's just having a plan of what you see on the screen, what you see on the chart. So Jim said, in the Traders Market Intelligence Report for Monday, 12/15, the daily SPX candle chart ended on 12/5. No daily candles for next week. This was meant to be a 12/8 report. You said it was 12/15. It was meant to be for today, Jim. So I don't know if something happened where I didn't get it didn't record the last day or what. I got to go back and look at it, but I appreciate it. I'll take a look. That's weird. No, it's for today. It's for today. Should have been for today. Okay. Let's go back in there. All right. So we've got Inner Circle coming up tonight. Check in. The 18th, which is Thursday, is our 2 hour. It's our last of the year of our full trainings. Mastermind group is the 16th. That's mañana. December 22nd, which is next week, Monday. It's the only thing we have going on is Monday is that Monster Market Movers. And then 29th, we'll wrap up with Trading You. Power Hour Trading Coaches Playbook are on a regular schedule, as in Pop, Covered Call, E-mini, all for this week. For next week, none of any of those are on, right? If you have subscriptions to any of them, you will be automatically extended. Don't worry about it. But we are closed next week for holiday, right? For the Christmas vacation. So for the holiday schedule. So we will be closed down. We'll be back in the office on the 29th. And then, of course, we'll follow whatever the market rules are as far as New Year's Day, New Year's Eve, all of that stuff, as far as hours. Mindset minutes, guys. Right now, everybody's busy, running around, trying to get stuff done for the holidays. Great. Mindset is a tremendous part of this being the market. And you need to have it in the, have everything right up there. So my entire team, all of the coaches have put something together on how they handle mindset. I would highly encourage you to spend the time and watch those trainings, folks, and capitalize on some of the mindset things in there. I mean, you're talking about 150 years of experience between everybody. Trip said CCE will be a maybe for 12/29. Okay. All right. Tom said, I've appreciated the mindset minutes. Yeah, good, Tom. I'm glad to hear that. I do appreciate you saying that because, guys, we put a lot of work, time, and effort into this, and we don't know. I mean, I don't know how many people watch them. I don't know who watches them, but we can see how many times the video was viewed, how long it was viewed for. We could tell if you were wearing your pajamas when you were watching it, or just kidding, right? But AI will do that soon enough, I'm sure. Jim said, mindset minutes have been very good. I believe I've watched them all. Excellent. All right, Trip. Good. All right, weekly training topic. Trading the upcoming earnings season. Here's the thing. Over the weekend, my mastermind group, one of my mastermind groups met. We do everything on Zoom. We don't get together very much any longer. We do it all on Zoom. And this was a topic of conversation, not based on anything I knew about what was going to happen for today. We'd already picked the topic for today. This just came out of a point of conversation from multiple members in the group, bringing up things about uh, earnings and so forth, right? So the very first thing I want you to keep in mind is Alcoa, AA, the ticker symbol AA, is the unofficial start of earnings season. They are the unofficial start. So they're kind of the early-ish bird, right? And then for us, Goldman Sachs, Netflix, for Pop, those types of stocks come in right behind it, right? Banks come in within a week or so as well, but I think banks before even. But Alcoa has always been the unofficial start of earnings season. So Alcoa's earnings, let's go back. AA is the ticker symbol. January 21. That's the unofficial start. Now, again, Goldman Sachs is before that. Netflix is before that. I think Tesla might be before it. But those two for sure are before that. Okay. Before that date. But that is it. So right now, when I look at Pop, because I've already prepared my Pop tracking sheet for tonight. I checked all the earnings already to see when they're coming out. I do every week, once a week. I go through and check every company of when their earnings are coming out. If anything gets close, I'll go back and check it again. But um, and the closest earnings we have right now is January 15th. Our earnings date is January 6th. So we don't have any earnings candidates this update to be concerned with. But January 6th, I'm sorry, January 15th is Goldman Sachs. Um, Netflix is the 20th. Tesla is the 21st. Goldman is confirmed already. They're the only one of the 20 stocks we look at in Pop that's actually confirmed. Okay. So Alcoa, we said was set for, where did it go? The 21st. Not confirmed. There's a minus sign there. It's not a confirmed earnings on it, but January 21st. So Goldman Sachs is already coming out before that, and they do every quarter. They come out before them. Okay. But this is who you want to look at for that, right? Some conversations or I took some notes on the conversations there, keeping in mind that there are some unique individuals in our group. One person we call the economist, who knows more about the economy stuff than I would ever hope to, right? The guy is just absolutely brilliant when it comes to it. It is not me, right? I'm not that guy. I'm not that person when it comes to that. You know, brainiac status is never going to be me. But the expectation from the general consensus was 10 to 15% is what we're going to see the S&P up this year. That seemed to be the general consensus across the board. When you look at the overall of some of the majors out there, I think 10 to 14 is what has been thrown around for 2026. The top sectors out there, and we just did a video on this for YouTube, guys. Look for this beginning of January. But AI is going to be one of the top three um, sectors is going to be AI, right? Cloud storage. We do not have enough storage. Guys, AI is crushing it with what storage is needed. They are killing storage amounts that are available. It is becoming uber expensive to get your hand on decent storage any longer. And then digital advertising, ad spend. Why? It's always been good. How many times are you on Facebook and you were on Google and you search something on Google and you were looking for a certain type of lounge chair, right? And all of a sudden you're on Facebook and all these lounge chair things pop up on your screen. And then you go over and you look at Twitter and all these lounge chairs, and you go over and look at Reels or whoever, and all these things pop up. And then you just go to Google and all of a sudden the ads that you see are around what you search for. So digital ad spend is not a big thing, but why is it becoming so much in focus again? Ironically, it's going to lend itself back to and then away from AI. Right now, there is no targeted ads really on AI, right? I don't know the platform that most of you are using for your AI. Whether you're using ChatGPT or Claude or Grok, um, or Perplexity. I don't really care which one you use, right? That's up to you who you use. It's going to be who you are most comfortable with, right? But that's the word, is that. There's a mastermind that I belong to that is AI based. I belong to two AI based masterminds. And one of them, the guy who heads it up, says, listen, when you put something in ChatGPT, once you get an answer, go back and check it in another one. And he uses Perplexity for a check. He said, of everything out there, Perplexity is the one that is the most accurate for checking, right? They're quoting 20% error margin in ChatGPT. Now, I don't have the stats for where it came from. This is what others are saying. I don't deal in that stuff. But AI, cloud storage, and then digital ad spend. Why? Because AI is going to get into that game. And if you haven't seen it already, there are brands like Perplexity that now have Comet. Comet is their web-based browser, and it all ties right into their Perplexity. And there are others. Grok has theirs, right? And Microsoft has theirs with what? Gemini, um, which is a phenomenal package. There's so much, guys. When you look at, have any of you used Nano Banana? Nano Banana? Give me one for yes, two for no. Ah, ah, you gotta do it. It's crazy. Let me just make sure I'm not logged in somewhere. Hold on. Nano Banana. It's a Google product. Google owns it. It's part of Google Gemini. Let's see. So I just want to be careful what I've got there. Here, all right. So I clicked on the thing that said make an image. Um, so if you have a photo that you can upload, I don't know if I've got anything on this my desktop right here. If I do, great. If not, I'm not going to do it. But from text, give me a photo of Wall Street in the winter, snowing, and Santa sled in the sky with 2025 on it. Whatever. I mean, literally made it up now. Google Gemini now has a feature to identify generated images. It's supposed to work great with Google generated images, but it is hit or miss with non-Google stuff. So there's all kinds of crazy things that companies are banning and stopping. Like right now, you can no longer. So there's Santa. There's 2025. We're over Wall Street. There's the bull, right? It's snowing. Whatever. Guys, you can take your pictures and make yourself into the Hulk or to whoever, right? But those products are crushing it right now. Google, it is expected that Google's AI will overtake ChatGPT and Claude. Guys, we as a company use ChatGPT, we use Claude, we use Perplexity, we use Gemini. We don't use Grok. We haven't started on Grok. And then that's just the main LLMs, large language models. There are so many other side programs we use, like Nano Banana and so forth. But pictures that are generated with that software that are out of this world, right? When you look at AI and data and the ad spend, you're going to have a lot more ad spend stuff a lot more ads being done there. And even more importantly, is you're going to have the ability as a business to show up on not SEO, but AEO, which is AI based, right? Of having the ability, instead of search engine optimization, it's AI engine optimization. And then you're going to have, most of you are searching how? Hey, Siri, can you please tell me dot 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 dot? And then Siri comes back and says, yes, I certainly can. If you do doing this and that and this and that, and it's speaking it on your phone, right? That's some of that AEO stuff is where people are going to get massive opportunities in their business. So that part of it is going to be tremendous potentially, right? Um, Financial firms are raising targets for the S&P 500 for 2026, which is huge. But are there concerns? Yeah, across the board. Here's some of the major ones we came up with. You may have heard of most of these. Definitely things to keep in mind. Inflation is a big one. We talked a little bit about it before. Interest rates. You know, my daughter wants to buy a house. She'd love to see interest rates go back down to 3. She goes, I don't know why it won't go back to 3 again. I'm like, honey, it ain't ever going back down there again. Forget it. Tariffs, wars, Russia, the Middle East, right? All of that. There's concerns. Asia, there's concerns. So is there Taiwan? And you know, there's so many issues geopolitically that could mess us up, right? We definitely need to take heart of understanding that just because things are looking good, they could change on a dime the next day. On a dime. So be very careful if you've dug in and said, okay, I'm bullish and nothing new about it. I'm just going to do this. Um, Les said, if you use an AI generated pick, can you use it professionally? Do you or AI own it? Um, yeah, so there's so many questions like that, Les. There's nothing that has stopped us from using, or anybody that I know from using graphics that way. Um, Now, if I take a pic of Spider-Man and have it, you know, modify it somehow, and if it does allow me to do it, because many times it won't, but if it does allow me to do it, I don't own that picture. I don't own that graphic. I can't legally use that. But there's nothing yet that you can't use something from a Nano Banana or anything else that it is yours. Now, you created it. It was your prompt that did it. You still have copyright on there until Congress passes something that you don't, right? So just something to keep in mind. All right. Because at some point, the government's going to have to get involved. All right, guys, we only have a couple minutes left. What companies do you want me to take a look at real fast at the end here? Tripp said China's economy is struggling mightily, even by their own questionable stats. Oh yeah, without a doubt. What is that, Gwen? Is that is that what it is? All 5 letters there, or I think you pulled it back. Okay, so let me go ahead and change this over. Okay, that's better, Gwen. All right. SPY, first one. Let's see. All right. So I don't mind where SPY is right now. Give me a bounce, get above the 681. You may have some hesitation at that 683 with the, and again, this is closing now. What I'm talking about is I need to close. I need us to close above this level here. Just bouncing above may not work. It's too far away. But overall, it's bullish neutral. I like it. Just watch that 21 moving average and that 676 on the downside. All right. As far as Netflix goes, all right. So we're overall in a bearish bias. We're at a rank of 3 right now. 92 is the downside target. Guys, I said it last week. I'll say it again and again and again. Right? Give me about $82 and a bounce, and I am all over it. That is a place I'm looking to add shares. We'll pick up shares for Netflix. So after their split, it's gone from 115 down to 94. So I like it. I just like it to get down another 10 or 12 bucks. So I'm waiting for the bounce, but right now, if it breaks the 92, Brenda, it's 87. We're looking for the next downside target. Hey, Roman, Meta. Let's see. Come on. Today is, yeah, it's on. It's 15. Okay. So right now, we've got just ugly, right? The last 3 or 4 days, it's just blah in there, right? Downside for sure. I'm looking at this is my preference, but we haven't shown any signs yet. I'd love to see another close down lower than we did close on, yesterday, Friday. But downside is 623, Roman. Nothing that I'm really liking about it, though. SLV is our next one. So no fibs right now on SLV, not one that I normally look at. Lower price position. All right. No. 49 to 53. Uh 49 to 53, $4 in jingle. So we need a negative 136 in here, although it probably doesn't matter for this analysis, but let's just get it in there. Silver, gold, life is good, baby. It's all rushing up to the, to the upside there. I'd like to see the pullback towards that 55. First, Dennis, on SLV, before we consider anything entry wise. And then I see you put in gold also, GLD. My wife asks Alexa daily what the price of gold futures are right now, because there's gold that she wants to sell, and every single day she's asking it. She's gotten to a point that she's a guru. Oh, and she'll remember. Oh yeah, it's up $22 from yesterday. It's down $3. Oh yeah, it was higher yesterday. It's lower yesterday. She remembers the numbers of where it is. Same thing. I'd love to pull back to the 392 in the bounce. 400 would be my first target, and then 403.30 is the next one at our all-time high, which is what that is for GLD for gold. All right. Trips said Micron, they've got earnings coming up this Wednesday. Yeah, so big hit today, huh? And right now, oh no, I forgot that I'm not updated on everything yet. So right now we're sitting just below that 245. Get above it, retest and bounce. 260 is my target. I'm okay with a strong bullish market, taking a bullish entry on this. Keeping in mind, as Tripp said, 17th, which is Wednesday, is their earnings. Patty's asking for Google. So if you go back here, that's where I started buying Google over in here. All right. Hopefully some of you did as well, because I made it very public when I was, picking the shares up of it. Very public. So, I mean, we're above the negative 618. Probably need a new fib in there, Patty. Oh yeah, good numbers. I like it a lot. I like where we're sitting. We're right at that fib level. We're just in a neutral bias right now, which means I got to get back above the 8 to come back in. But 721 points. All right, we need Fibbits in here. So let's go add a negative 136 and a 118. All right. So 318 is the first upside target, Patty, and then 329 is the one above that. So there is no 1222 power hour, Jim. That's correct. There's no classes the week of the 22nd through the 26th. The 29th, we are back as a yes, and January 5 is a yes. Correct. Thank you for clarifying it, for asking the clarifying questions. I think I got all of them there. Will you keep silver or sell it if you had some? I have lots, Roman. I'm a very big believer as a prepper in silver, right? Silver coins, 20 bucks ish, right? For a coin, it's a lot easier to break than going to somebody and says, I've got this gold coin worth a couple $1,000. Can you break it and give me a loaf of bread and give me the change? No, I'll take the coin though. $20 silver. Okay, give me 5 loaves of bread, right? A lot easier. So I'm still holding on my silver. I don't believe that we top out, and this came up as part of our conversation on Mastermind. I don't believe we top out until sometime in later part of 2026. I don't know exactly where, maybe third quarter. Um, but I'm still holding right now, and I have physical silver. What do we do with all the pennies we have? Make bullets. I don't know, Brenda. Sell them to a coin dealer. Save them and sell them to a coin dealer. That's what's going to happen. They're going to have huge value once we stop making them. Gwen said, so we enter our trades using the price charts, but do you consider that the theoretical value is so far removed from the bid ask price before choosing the trade, or do we strictly go by the parameters we've learned in Power Hour? Oh, yeah, I didn't get that one, did I? Um, E EAM. So, I might look at theoretical value if it's a stock that I don't trade, but I tend to trade the same companies over and over again. So I'm not normally looking at theoretical value. If the bid ask is okay and I'm okay with that price, I'm in and out for today. I'm okay with it. Is there news that drove it up though? That could become a problem. You may want to look at what that option was yesterday, the day before. Was that a $12 option yesterday and today it's 36? Right? Because something happened price wise, news wise, that has driven it up. EPAM is one that Gwen had asked for. Not a stock that who is this? EPAM Systems. Okay, I don't know. I don't really have a good place to draw a topping pattern on it yet, Gwen. All I can really draw off of right now is in here, assuming I don't have anything further back. That was a bad assumption. We do, except I think it's going to be too big. Yeah, 16 points. Yeah, so we need to, yeah, every line has to be split. So I don't like the fibs on this at all, Gwen, because when I have to split interim lines, anywhere between the 764 and the 236, if I have to split those in half with fibbits, and we do 19 and 19, 19 to 38, that's 19 points. We've got 11 and a half. I need to split that. Whenever I've got to split them, it's too big. It's not a very clear um, place for the fib to be drawn, and I don't really have anything else to draw off of. I mean, I could guess what's here, but I don't. I'm not a fan. We don't really have a good topping pattern yet. It's not there. 97 to 214, 17. It's not that much better. It's only 2 point. Let's see. 87 and 97 is 10. Okay, we actually could get away with that. But it's really not a good place. Gwen, I would pass on it just because I don't have a viable place to draw from at this point. So sorry about that. Um, I heard saying that there will be a 10-year move into commodities that is a long run up and a slow and steady. So I don't play the commodities side of it that way. Gold and silver are a much different choice for me. Oil is a much different choice for me. I heat my home with oil. So I pay very close attention to futures. I go with the old Amway model that I believe that if, as an Amway distributor, if you're going to cut my hair and you're not, you're my barber and you're not buying barber supplies for me or something that you could use in your shop for cleaning up or something, then I'm going to go to another barber that does. Because if you're making money off me, I need to make money off of you. That's the way I look at oil. I want my oil to pay for its. I want my home oil to be paid for with futures trades, with oil trades, right? And the likes. Gold and silver are just they're crazy, right? Bitcoin is nuts. Ethereum is insane. I mean, these are massive movers. These are markets that we've moved into that. My wife went into panic mode the other day when she started asking me questions and said, well, "Where is everything?" She goes, if you die, well, how am I going to know where everything is? I said, well, you'll dig. You'll get emails and you'll go through all my, 180 emails I get every day and you'll find brokerage firms sending you emails and go, oh, okay, we must call this person. We have an account. And her name is on all of it. She just has no idea. It doesn't, not what she's focused on. But we're in a market right now that has been amazing. Hopefully you all have taken advantage of it on the run to the upside. Guys, we got a jet. I got another meeting in 5 minutes. So appreciate y'all being here. Go ahead and click on that link the links that Andrew dropped in there if you're interested on that. And you guys have a great rest of your day. More than likely, for many of you, I will not get to talk with you again. Have a wonderful holiday, Hanukkah, Christmas, whatever it is that you celebrate. God bless. And Merry Christmas to you as well. And you guys have a great holiday season. Make sure you do everything you can to spend it with family. And love you all for being here. Thanks a lot, folks. Take care.